Let's get to Bob Pisani and a full review of the year that was for the market. And Bob, all in Russian, is that right?
Yeah, Moscow. Pop the cork over there, Wolf. I'll tell you what's important here. We closed at an historic high. That doesn't happen very often at the end of the year. Last time that happened was 2013, and it's only happened 8 times since 1928, so quite a close to the year and quite a last hour and a half. I was trying to vote on the stock of the year. I always give a stock of the year, and I had to do 3 of them: Apple, Microsoft, and Amazon. Look at the moves up on these stocks. 57% of the return on the S&P 500 is those 3 stocks: Apple, Microsoft, and Amazon. Think about that. 57% of the return on the S&P 500. Sector of the year? Oh, that was an easy one. I didn't have to hesitate. It's semiconductors. My heavens, they're in everything. Everywhere we go, there are semiconductors, and you can see that in the returns. That was a no-brainer for sector of the year. How about the investment trend of the year? What really mattered? Oh, that was easy, too. Thematic tech ETFs. I keep pointing out every day people are buying stocks because they like solar stocks, they like online retail, they like cloud services, they like esports, they like cybersecurity. They bundle them together in these ETFs, and they love trading them, and they drove the prices up all throughout the year. We should be reminded, even though we're up 16% for the year, there were some significant laggards and some real destruction, particularly in the energy space, where you see companies like Occidental down nearly 60%, Exxon down 40%. The S&P Energy Index is only 2% of the S&P now. And, of course, we noted the destruction in the travel and the airline and the real estate industry. There's Simon Property Group down 43%. As for the S&P 500, let me just remind everybody, we are on one heck of a tear. And I don't mean in 2020. I mean in the last 11 years. The S&P 500 up 16%, but we've only had 2 down years in the last 11, and since 2010, the S&P 500 up 240%. Sarah, Wilf, Mike, Happy New Year, and thank goodness 2020 is over. I look forward to being with all 3 of you in 2021. Good riddance.
Thank you, Bob. Bob Pisani, Happy New Year to you, my friend. Mike, it is hard to believe that the S&P 500 sitting here at a record high, up 16% for the year, the Nasdaq up 43% in a year where I said we have a once-in-a-lifetime pandemic where we lock down our economy. Unemployment skyrockets to, what was the high, 14.8%, where we were losing 20 million jobs per month. And we end with these kind of market gains. It's hard to fathom.
It is. And we've never seen anything with that kind of compressed timeline around it, when basically we had this flash recession, a market shock. And what is interesting is that we went from less than a year ago, a very late cycle environment. Remember the prior year we said, oh, the yield curve inverted. We're already at 3.5% unemployment. It looks like the Fed's going to have to, at some point, raise rates. Profit margins look like they're peaking. It was all about, when is this cycle going to peter out? And then the cycle was just nuked by this shock, and we had this economic shutdown. Now, the policy response explains a tremendous amount of what happened. If you want to tote it up as, $8 trillion of total monetary and fiscal stimulus, and also just the message that the authorities were not going to let the absolute doomsday scenario play out. All that stuff combined with corporate balance sheet resilience and this massive rush of risk appetites getting back into the market. I don't think I would never have foreseen the way it happened in magnitude, but in shape, it's given us the kind of thing that we get at a V-bottom early cycle move. The problem is we seem to have late cycle valuations and sentiment. So I don't know how that plays itself out going into next year, because not everything is quite in tune.
Steve, you've been reminded of 1999 a little bit this year.
Yeah, thanks, Will. There's definitely a bunch of parallels. I mean, first of all, one of the things that we saw in 1999 was we democratized investing in a way we'd never done before by internet brokerage. Well, we democratized it again by making it free and fractional shares. If you want more of something, make it free. Some of the thematics that we see, the whiz-bang technology ideas that people are gravitating toward, the embracing of risk. This all has a 1999 feel. And of course, 1999 was abetted by a massive increase in Fed liquidity, thanks to Y2K. Now, that had a finite end. As of now, we don't know when the Fed is going to pull the plug. And that's the real difference, though.
Shepard Smith here. Thanks for watching CNBC on YouTube.